Hey, this is Sasha, and thanks for joining me here for another episode of Let's Talk Stocks. And in this episode, I did something a little bit different. What I have actually for you is a coaching student that we've discussed and talked about, just like I do with my other coaching students, and we recorded a live session. Now, the way that I picked this person was we just started to email back and forth a little bit and answering her questions, because I always try to answer everybody's question, even though it takes me sometimes a couple weeks or even months to get back to everybody, even if it's on YouTube comments and so forth. So if you have a question and you sent it in, I always try to get back to you. But in this case, we went back and forth and it just seemed like things were a little unclear, or there was just questions that just kept coming in. So what I wanted to do was actually either send a video reply or said, hey, why don't we just talk on the phone for 5 minutes? It might be easier. And it turned into a little coaching session that I thought, hey, why don't I share this with you all as well in the public on the YouTube space? And that way you get some insight, because I'm sure everybody else is in somewhat of a certain situation that maybe could relate. And if you're not, maybe sometime in the future, I might choose you to do another free coaching session. So in either case, what I wanted to do with her permission was post this coaching session. I've trimmed it down just a little bit, so that way you go ahead and see, what is it that we do on a coaching session? Or maybe you can relate to some personal advice and some insight of what you could do with your money. Now, this isn't advice directly for you, but it just gives you some perspective on things to think about, that if you're in a similar situation, what is it that could happen to you? If you have a similar amount of capital that you want to invest in, then what is it that you could do with that money? Or if you're in the same stage of life, what is it that you could be doing, should be doing, or just thinking about prior to getting into trading, investing, or doing something with your money? So anyways, here it is. Enjoy the session. And towards the end of the video, what I'll do is give you a link to my newsletter list, which I'll probably be able to do here once a month. Start choosing some people who are commenting more often, reaching out more frequently, and just been on the newsletter list for quite some time. And maybe we'll start making this a nice monthly thing as well. Just giving out free coaching sessions, so that way other people that you can relate to in their situation and maybe get some more insight from a one-on-one perspective. So here it is. Enjoy the session.
So my name is Kirsten, and I live in the United States, in Texas. And so I have been a stay-at-home mom longer than I should have, which means I have, for all these years, I have studied a lot, I have learned a lot. I also have a job now, but the one thing that I did miss was building a career. So, and I'm now at an age going towards 50, where I don't really have any savings for later in life. And so there are a few aspects about trading that really speak to me. And I watched probably over 100 videos, or 200 maybe. I also got the book that you recommended.
Oh yes, William O'Neill, good book.
Mm-hmm. And so my idea was creating a long-term plan, maybe first a 3 to 5 years plan of what is realistic, and then maybe look into the future, what can I do with what I have. And then I will have a few questions.
Okay. How dedicated do you want to be in trading? Meaning, how much time do you want to spend on it? Do you want to spend, 1 day a week trading, 3 days a week? What's kind of your, time frame when it comes to trading?
Mm-hmm. So pretty much full time. So I have a job right now, but it's only 3 days a week. And the good thing about that job is that half of the time I'm free to read or watch videos or do whatever. So my kids are also pretty independent now. So I can dedicate easily, I would say, 35 hours of study time per week. And so I was I'm aware that it's a very difficult field and that I won't just start trading next week. So I'm aware that it will take me years to get educated. And so I'm willing to put in that time.
Okay. And you're starting with how much capital did you say you're looking to start?
So I have a little bit over 20,000. So I was thinking 20,000 and then a few, thought maybe 3,000 or so for course and computer setup.
Okay, of course. Okay, and is there any specific type of trading that kind of resonates or fits for you a little bit more than others? What's kind of pulling you, attracting you towards a certain type of trading style, a trading method? Give me some more insight on that. You've watched a lot of videos, so I imagine there's a few things that maybe you feel more connected with.
That was actually the big question in the beginning when I didn't know, well, stocks or Forex. And I don't really have any emotional bonds to any stocks or larger companies, for example. But it seems to me I would like to learn what is not as risky, where maybe the volatility is not as high. So right now I'm going more towards stocks.
Okay. All right. Okay. So okay. So let's start off with a few major questions that you have. I'll just kind of jot those down and let's try and tackle those kind of one by one real quick to make sure that you're getting the most out of this session. And then I can hone in on a few more of these things that you've covered, and maybe we'll start getting deeper into each one of these individual subjects or questions. So why don't we start there, and that might be a good starting point for us.
Okay.
Okay, so shoot away whenever you're ready.
Um, okay, so my idea was that I will take now at least the next 6 months for only studying and educating myself, and then start with a trading account, maybe for 2 or 3 months or so, and then slowly getting into trading. And I don't know if that's realistic when I think about 1 or 2 stocks per week, or maybe one per day, 3 days a week. So I think I don't have a realistic idea about, the time frames. Let's say I really put in at least 35 hours a week into learning. Would that sound like a good idea, or?
Okay, all right. How about the next question? Because I want to see if you have a couple of questions that maybe are similar that overlap, and it's a good way then to discuss that some of those questions maybe together. But I took a note on this question, and then we might go back to it here.
Okay, so I heard you talking in your videos a lot about how important it is to find your personal strategy. And so my question to that is, will that come over time naturally? Or because you said don't copy other people's strategies. Is it something that's just part of the learning process to find my own system? And then also, right now, I don't really see, I don't feel a pull to day trading versus swing trading. So will that also develop naturally over time? Is that part of the learning curve? And the other question I had, how much risk? Because if I lose my starting account, there won't be another account following. So do I have a certain percentage of risk of money that I allow myself to lose per month? And if I lost that, then I go back to studying and hope that I will be able to learn from my mistakes.
Okay, I think this is a good starting point for questions, unless you have maybe one other one, or otherwise, I think this is a good starting point where we can start tackling a few of these questions. Do you have any other
I
major
think
ones?
No, the other ones are not so much questions, more statements and yeah. So not really. Those are the main questions for today.
Okay, so let's start off here with a couple of these things right now that you've mentioned, and what we'll do is we'll go ahead and uh, piggyback off of one or and the other. And if you have any specific things, just go ahead and interrupt me as questions come up, okay? All right, so looking at this, as far as you said, okay, 6 months to study, what's kind of the plan? We are going to look at, okay, finding a personal strategy, how does that go? And that kind of ties into pooling into day trading versus swing trading as well, and how much risk. Okay. A lot of beginners, or when they first start out with, when you talk a lot about stocks versus Forex and you're looking for things less risky or less volatility, you talk about this at the beginning. You said you want to do things less risky, and that's kind of natural because we want to dip our toe in. Now, you have to remember in trading, volatility is your breath in the market. Okay, this is like your air, it's your life. Without volatility, you have no opportunity. You have no money that can be made. So I always stress that you want volatility. You want pullbacks. You want stocks to actually sell off. It sounds a lot more un-American. It sounds like you're against investing or the stock market. But if you're active, you actually want the movement. Now, with a lot of traders as they start out, they actually want low VIX, low volatility, and this is actually the wrong mindset because you have no opportunity. Because when you have a low volatility environment, stocks barely go up. They go up only a tad bit, a little bit.
Mm-hmm.
When you have more volatility, they can move very quickly. So that means also very quickly to the downside, which allows you to either buy the dip and then it whips up to the upside, allowing you to churn, okay, or turn over um, the trades more frequently. So you can do, let's say, as a hypothetical example, 5 trades in a high volatility environment in a week, whereas in a low volatility environment, you might do 1 trade a week. So you have to switch that mindset in terms of the volatility as far as the risk goes. This actually goes into pooling you into day trading versus swing trading. This is going to depend on market conditions as well as your personality type. Okay, so if you have kind of an A-type personality where you want to ride roller coasters, you're really chasing money, all those kinds of things, you're going to want to be more of a day trader, but it's not always the best situation to be a day trader because remember, you need volatility. You need movement of the market to be able to day trade. Now, can you day trade in a low volatility environment? Absolutely. But is it always beneficial? Not necessarily, because in a low volatility environment, it's more difficult to day trade. So now, like what we've had, if you've been watching the market with a VIX of like under 10, under 10 and a half, it's actually way tougher to do day trading. It's much more difficult, simply because the opportunities are not there. There's no dips, there's a lot less sell-offs. The movements are smaller to the upside. You don't see those huge movements to the upside as quick. So you need to be flexible a little bit depending on your own personal style and strategy, but also to market conditions. So those are kind of the first couple of things I want you to mention as far as just looking at things from a certain perspective. Does that make sense, or do you have any questions about that?
It makes sense. I think my fear about volatility, high volatility, came from this statistic, that 95% of beginner traders give up after a few weeks or months. And so I just assumed it's because there are more losses than wins. And I was thinking, okay, let's not start to get into the market before I think I'm really ready and I understand what I'm doing, and maybe also let's keep the risk low to lose so much. But what you just said makes perfect sense.
Okay, good, good, good. All right. So the next thing I want to actually cover is looking at kind of your personal style and strategy. I did talk about that you don't want to necessarily copy someone specifically exactly. Now, at the beginning, trying different people's strategy helps you open up to new ways of trading. It helps you see different variations. But you need to understand why people choose the trades that they do, why the type of trader that they are. So look at it from an outer perspective, and then you can try it, and then go ahead and try another one and see which ones you can relate to and which one makes sense. But you don't want to do it blindly. That's kind of my main point is that you don't want to just go into someone and copy them completely blindly. If you do that, that's really where the trouble is. Can you go ahead and try one strategy and see how it performs and see if it works for you and then make tweaks with it? Absolutely. I mean, that's just part of the process of learning and discovering. But you don't want to just go on a list, a website or alert system and say, hey, this is the stock to buy, and that's what you need to buy. You need to understand why people are choosing the stocks that they are, how they're taking profits, the decision making behind it. And that's a little bit more difficult through a service, but it can give you ideas to the trades, and then you can tweak those things. Okay. So this is where you'll tweak the how much do you risk. You've kind of mentioned that you've had a bit of concern for how much do I risk, and then if you lose it, you'll lose it all. And then do you go back to learning again? And also we've talked about the study time frame and looking at things. So these questions actually kind of go a little bit more together. And what I'll do is actually let me do my see if I can pull up a down camera here real quick. Maybe I'll have to unplug one here and re-plug it in and make sure that the camera is working and see what I can do here. When we look at overall what we're trying to do for creating kind of a timeline of how long do we want this to be. Okay, so let's say, let's get another marker actually. A timeline of how long do we study for? Okay, where do we open an account? Where do we start paper trading and then maybe real trading? All of this really will depend on you. Can these things overlap a bit? Absolutely. You can have continuous study if we have a study time frame, and this could continue to evolve depending how far you want to go. I mean, if you just want to trade stocks, you could stop at a certain point. If you want to trade, let's say options, and you decide that you love to study and you want to really get more into it, then that study time frame can continue moving forward. Okay, so as you're getting into this study time frame, okay, so this is all our study. Somewhere in here, this will start to overlap. And as it overlaps, you'll start getting into this part as opening an account. So it doesn't mean you can't have an account just sitting there with cash. There's nothing wrong with having an open bank account sitting with cash. The same thing with paper trading. Once you have an account open, here you can paper trade. Right? And as you do some paper trading, okay, and you continue to evolve paper trading, then you can actually also do some real trading. And you can see how this actually starts to somewhat overlap one over the next, and you're still studying, you still have your open account, and you can still continue to paper trade. Like let's say you're trading stocks and you're trading stocks in a real way, but you're still paper trading the option side of things, okay? Mm-hmm. Depending on how far you want to get into the education part of it. So how much time do you really devote into this? Well, it really depends where you're at and how quickly you're getting and picking things up. I always say once you have some basic knowledge, get into opening that account fairly quickly. and start paper trading fairly quickly. So it's just kind of a fear thing that people, oh, if I open up an account, I'll automatically start losing money. But it's the case of just opening an account. So just get an account open, and at least you'll have a paper platform. The study part, you're going to continue to study for quite a while on that side of things. So at least I would say, put 1 to 3 months as a general guideline into studying at the beginning. That'll give you a good amount of knowledge to be able to start paper trading. Now, for you, if you're worried and you talked about getting into the losses and you said, well, you don't want to risk too much and you don't want to lose your full account because there's not going to be another account. Well, right here, one of my suggestions is always, you can always trade 1 to 3 shares. There's nothing wrong with that. If you're trading option contracts, 1 to 3 contracts, even 1 to 2 contracts, which if you do 3 shares of stock, okay, and let's just say you're trading Apple at $150 or whatever stock at $150, that gives you an opportunity as things move higher. You can take one off into strength, so you sell one and you still have 2 left over, or you could get in with 3, get out with 3. That's why I usually say 2 or 3 shares is good, because you could take one off into strength. If you want to do your calculations, well, you can just multiply that times 1,000 if you want to see the real figure, or maybe a higher figure, or the potential. Now, the reality is this risk, yes, you lose a bit on commissions, but even if Apple drops, let's say, to $100 a share, you're only risking about $150 from 3 shares, rather than, $5,000 or $10,000 that many people do right at the beginning. So that's kind of a nice starting point, I think, at the beginning to get your feet wet. There's nothing in the rule book that says you have to trade with 30 shares or 300 shares or 3,000 shares. There's nothing that says you need to put on that amount. Yes, you have commissions, but I would much rather see people lose, let's say, $20 on commissions each time than a $5,000 or $10,000 drop for not knowing what they're doing. This is experience, okay? And you can't buy experience. You don't walk into a store and just say, can I buy 5 years of experience? So if this makes sense, you still want to get into the active side of trading, but you can do it with a limited amount of lower risk without killing your account, without getting into some major damage and cutting your account in half. And that's really where a lot of people, I think, struggle, is that they go too big, too fast, too soon. It's kind of like giving a 16-year-old kid, a Mercedes or a Ferrari at the beginning. It just doesn't make sense at the beginning because they're new to driving. Does that help a little bit?
Mm-hmm. It's helpful, yeah. The question that also had to do with this model that you just showed was, I heard a few people now saying, well, I only became profitable after 5 years of being in this. And so my hope was, so if I really commit to it full time, my hope was that it would be a little bit earlier, something like 3 years more. So to at least be profitable. I'm not talking about making thousands of dollars per month, but to just have a consistency to really know, okay, I'm learning from my mistakes, and I'm consistent in having more gains than losses. So I had this. I hoped to push this back more towards the 3 years mark.
Well, that is a combination of a couple of factors. For me, it took me even longer than 5 years. It took me a lot longer. Maybe I was slow. Maybe I was young. But everybody's at a different point, so it's tough to really say how long it takes people. But I find that there's a couple of factors that's involved. Number one is your awareness of yourself. I would say that's probably the biggest thing that I see most people not focusing enough on, is that how well do you see yourself from an outer perspective? Um, because for many people they say, hey, well, I know it, I got it, I think I got it, and this is easy, the market keeps heading higher, and then it's that, 1 or 2 weeks that really you get a market turn in the other direction, and all of a sudden they lose half of their account. Well, now all things completely changed. So that's one thing that can really help speed up your learning process. And it also becomes a combination of your learning process. I would say doing coaching sessions is probably the fastest way to get there because you're really focused on you, but it's also the most expensive. It's like playing a guitar with someone that's fantastic at playing guitar, a musician. They're going to point things out to you and what you need to know, what you need to learn, and how to really create those things and what to look for. It's not necessarily saying, hey, this is the way you should do it. It's more about opening you up to, hey, try this, see how you behave and react, and let's go back and look at things from there. So that kind of helps, but then you have that other part where the most cheap or cost-effective method is really just free videos online. So can you get there that way? Absolutely, but it just may take you longer because now you have to put the puzzle pieces together and experiment and that kind of thing. So for some people, it creates a combination of, okay, do I do a couple courses? Do I do a coaching session? And where that lies. It really just is a matter of personal preference. Again, if I go back to the drawing board, um, let's just say, okay, well, am I willing, if I had a $20,000 account and I wanted to go ahead and say, okay, well, I'm willing to spend $10,000 of this on books, courses, coaching, seminars, anything that I need to do to be able to get there quicker. Or on the flip side, some people may say, hey, I have this $20,000 account, but I only want to spend, $1,000 on, well, let's just say the same material. Well, if in this case it takes you 7 years to get there, and in this case it takes you 3 years to get there, which one is better? Well, that one's going to be a personal preference and a personal matter. Again, it's for some people, they value more the financial additional $9,000 over here because they think they want to trade with that. For other people, they want to shed this additional 4 years. Hey, I just saved 4 years of my time and headache. So it's kind of a balancing effect. You can't really make any promises for anyone really specifically of what's going to happen one way or the other. It's just more of you personally going with your studies, putting in the time, actually doing the trading, screen time, and where that balance is. So I hope that helps.
That helps, and I was thinking about that, and I think I'm falling in the category right between those two examples, because I was thinking on the internet, all the free videos, and even all of your free videos, there's so many, it's just overwhelming. So I would like to do an in-depth course online and then accompany that with a study book, and then maybe have a coaching session every 3 to 4 months or so. So that was my thought. Maybe it's about $4,000 going into education material.
Okay. Well, it's a good mindset because, for a lot of people, they go in with they say, hey, I don't need it. Everything's free online. But it's a good mindset that you want to educate yourself and continue to push yourself because, just going to college, is a couple $1,000s here and there, depending on where you go, what you study, and there's a lot of intricacies that you'll find as you start getting into the deeper subjects. Or in the deeper material. There's only so much you can cover let's just say in a 5-minute video. There's a lot more that you can cover in a 30-minute video. There's much more that you can cover when it's one-on-one. Same thing with books. A book can be 200-300 pages, and they can have an enormous amount of value there. So it's finding that little bit of balance that that works for you personally, and then making some tweaks and adjustments to your plan. But you really need to kind of know when you approach this, also in part the direction you want to get to, in a way, and try a few different things and start experimenting. So at the beginning, I always recommend that people try to trade a handful of different things, so that way they can see what you like, what you don't like, whether that's stocks, options, Forex, as you mentioned. You talked a little bit about penny stocks and cryptocurrencies, I think, in our email as well. But you need to find something that you can really resonate with and connect with, so that way you can do that time and time again, and maybe have 2 or 3 tools in your toolbox when market conditions change or when you need to make adjustments to those things.
Well, I thought that options are for later, so that as a beginner, I will definitely start with stocks and not with options.
Yeah, it's definitely a starting stone, a stepping stone, but then you want to know how far you want to take it. For some people in their mindset, they already say, "Hey, I don't want to do options at all." 100% they know that. And when you say that, it limits you, because now you're not open-minded to, hey, how far do I want to go? How much knowledge do I want to put in? So the biggest factors for learning, I know, and I disagree. So if you can be open and you can say, hey, I'm willing to take it as far as I need to take it, but that also depends on kind of your lifestyle. So you said you want to do some replacements of your income. With a $20,000 account, that also comes down to, well, how much are you realistically looking to make on this? So that would be one of my questions to you, is what's enough? For some people, they want to just make, a couple $100s a month just to pay for additional groceries. For some people, they're looking to fuel their retirement. What is it for you? What are you looking to do?
So short-term goal, which is 3 to 5 years, is $1,000 per month or more, if that's realistic. And I don't know how realistic that is with my account, but so that would be enough for me to have a minimalistic lifestyle, with the job that I have currently. But long term, of course, I would like it to grow. Long term, I would also like to afford a small piece of land one day, and put a small house on it or something. But that's definitely not in discussion right now.
Okay. All right. So at 1,000 a month, you're kind of looking at about 5%. So if I move the calculator here, and you look at it, actually, I guess it would be off screen for you, but $1,000, or with a $20,000 starting trading account, and we look at 5% a month, that's about $1,000 that you're looking to make. Okay, so maybe it'd be easier if I drew this. Let's take a look. So here, when we do this and we go into it, with a $20,000 account at 5%, that's where you're looking at $1,000 a month. Okay, 5% is a fairly healthy, I would say more intermediate to advanced trading already at that point, or people with higher risk. It's a little bit higher risk. It's a little bit more advanced because, as you know, the typical standard market percentage is 8%, or 8% is the typical growth. So if you're looking at 5% a month, that's a lot quicker on growth. The other thing you have to take into consideration on this is that typically you're not going to trade your full account balance. Even if you trade only half your account balance, let's say $10,000, that all of a sudden shoots this number much higher. Okay, so that's one thing to keep in mind because you need to take into consideration the losses, you need to take into considerations any adjustments, just capitals to fix things, and capital on the sidelines for investing and taking opportunities, right? So you usually at the beginning only risk about 50% on any given month at most. A lot of people, they say 2% is this typical standard because then you're less worried about it. For me, as I get into more coaching students, I find that even 50% is fine because if you're more active in watching things, um, it's a little less, it's not as big of a deal if you're watching things, and if things make a turn, you can always get out of those positions, especially on a lower account sum rather than, multi-million dollar accounts. But in this case, you're still looking at, let's say, trading with half that account size. And in this case, this forces you to make a much higher return on that. So you have to you could either raise your capital amount, or that also means raising your, rate of return. So it really starts to make things a little more complicated, which also means you have higher risk. Okay. Because, for example, if you're making dividends, let's say if you take any dividend related company on $1,000 and you're making, let's say 30 cents each quarter versus on $1 million. Obviously, it depends on share count. So let's say 1,000 shares versus 1,000,000 shares, and you're making 30 cents. It's going to be much more, and bread still costs the same amount. Bread is still $5, $6. So you have to take that into consideration that the more capital actually that you have, the less risk you can take. The world is actually set up in a big way to cater towards the wealthy and the rich. It's kind of like when you go into a bank and you get a safety deposit box. Well, if you only have $1,000 in there, you're going to pay for that safety deposit box. If you have $1 million in that bank account, you'll have a free safety deposit box, free checks, and many other things. So, um, but those are some things that you'll want to consider as well as you start looking to kind of trade or hit those targets. I'm not saying you can't do it. I'm just saying at your age, you'll want to be more conservative. Watch the risk, especially as you're new. You'll want to watch the risk. You'll probably start out with, let's say, making 0.5%, maybe then getting that to 3/4, maybe then 1%. But if you're looking to get into 5% right away, it's a little more difficult and tougher. Not saying it's not possible. I'm just saying that have that concept in mind, and also you'll probably want to trade with probably only half your capital to start with, simply because you'll want to use that additional capital for other investments as they approach or as the trade ends. So as you take profits, you'll have that other capital to use it for what you need.
And I was thinking about this number of $1,000 per month, rather after 3 or 4 years of trading. I'm aware that this is not a beginner's number, definitely. And the good thing right now for me is I don't have to make profit within the first 2 or 3 years. So it's really all about learning and experiencing.
Okay. Well, that's a good starting point and good mindset. Absolutely. You just have to kind of work out a plan and work out the material, the courses, how you want to get there. A lot of strategies to try, and get a broker. Many things on the checklist to get there. But yeah, I mean, if you have kind of a target in mind, that's a good starting point. But I would say a good next step is to say, hey, these are the things I want to learn. These are the things I'd like to try. A couple of books I want to read. All those kinds of things, and lay out kind of a little plan. It doesn't have to be that specific because plans will change, but it just gives you an idea of, okay, I want to try this, I want to try that, I want to do this. Paper trade, get a broker, get two, 3 different brokers, see which one you like better, which one you prefer or more comfortable with, because it only takes 15 minutes to get a broker. It's not going to cost you anything. All that kind of stuff. And then slowly start fine tuning where you feel comfortable, and that'll slowly move you in a certain direction, or path kind of on the road, and get you to that destination, because there's going to be a lot of zigzags and pit stops and along the way.
Yeah, sounds good.
Yeah, does that help? Okay. Are there any kind of other major questions? I know we've covered kind of some of those basic questions. Is there anything else you want to cover more specific or in detail, or things that came up as we were chatting here real quick?
No, nothing that came up now. I think I want to maybe share this one. It's maybe a minor concern that I have, that where I didn't find an answer to. So is there any way that people make the same mistake over and over and over again in trading, and they can't figure out what they are doing wrong? Or will you eventually learn from your mistakes?
That's kind of what we talked about on the awareness part. It depends. If you can look in the mirror and say, hey, I messed up, which, if you look at politicians or many other people, they usually try to brush it off. Hey, no, was the right thing to do. The thing is with trading, you can't do that. You have to be quick and say, hey, I screwed up. That was bad. Ugh, I was wrong. You need to be very quick at that. If you can say, I was wrong, this is bad, I did it bad. Sometimes it's you did the right thing, and that strategy might win 99 out of 100 times. But in that case, it didn't work out. And hey, it happens. You just say, hey, my strategy works great. That's fine. If it does, and it's proven to you, because it's about the numbers. And if that strategy works great 99 out of 100 times, fine. Just say, hey, the market was really aggressive this time, and I didn't personally account for that. And that can happen. Can you learn from those mistakes? Yeah, anybody can. Do most people? No, most people don't. And that is because most people are not self-aware. Most people don't look in the mirror and say, hey, I screwed up. It was my fault. Most people think they're the greatest drivers. They cut in and out. It's just the nature of humans. We don't want to say we are bad, we have flaws. What's our flaws? It's a natural defense and protective mechanism. Can you learn from them? Yeah, if you're more aware, if you're more developed, maybe you can film yourself. Sometimes having a coach helps as well. But otherwise, it may just take a lot longer if you kind of do it on your own. If you're less aware, if you're more aware, you can maybe catch it right away within a second. So, but it depends how deep, I guess, the issue is, or the problem. Self-control, emotions, that's a big thing that many people don't focus on. It's that inner game, because it takes the two parts, as I always talk about, the inner game and the outer game that you have. The outer game is the charts, the actual trading. That's what most people want to focus on. But very few people focus on themselves, the emotions. They don't invest in themselves as much of, how do I deal with this? How do I compensate for a losing trade personally? They might try to say, hey, how do I fix a trade? But not, how do I clear my mind to go against the grain? So I would say that's actually just as important, if not more important, than the books on the external factors or the actual trading part. It's almost like reading the psychology books, which are not even trading related, but they'll help you understand yourself.
Yeah, and I think that's where my question also originated from, because I really got your message in some of your videos about those two parts of the game. And I'm aware that, they both count.
Okay. All right. Wonderful. All right. So anything else? I mean, I think we're kind of good here on time. I mean, we're already at 40 minutes or so. If you have any other questions, I'd be happy to answer them. But I'm sure you'll also be thinking a little bit about some of the things we covered and discussed a little bit.
Well, I definitely appreciate that you took so much time.
Oh, you're welcome. Happy to help, and glad we're able to cover a handful of things. And sleep on it. I'm sure more questions will come up, so take a couple of days to digest a few things, and then, reach out if you have any other questions, and I can do a quick video response if you need. Okay.
Thank you. I definitely want to stay in contact.
Okay, absolutely. So feel free, let me know how things progress over the next week or two, and let me know what you come up with if you registered your broker, and that way you can let me know of your progress and have a little accountability. And okay, great. All right. Well, enjoy your evening, and I'll be hearing from you then.
Okay.
All right.
Thanks.
Take care. Good night.
You too. Good night, Sasha.
Bye-bye.
Bye.
All right, so thanks for joining me. There we go. That was pretty much the majority of the session. I did trim it a little bit just to keep things a little bit shorter, but I hope you got some good insight on that if you were in the similar situation, if maybe you're in the similar stage of life, or maybe have the same type of capital that you want to invest. So by all means, take that with a grain of salt and look at your own personal life and perspective and see if you can relate to that. And then, if you can, then maybe some of the things could apply to you. And if you can't, well, maybe there's another session around the corner and it might just be your session. So what I plan to do over the next couple of months, if you're interested, go ahead, give this video a thumbs up. And if you like it, then we continue making more of these kinds of videos. But if you're on the newsletter list and you've been opening up my emails frequently, if you're commenting on YouTube, posting good, valuable information and connecting with other people, and I see that around, then I might just reach out to you to see if you want a free coaching session. So by all means, go ahead and click the link right here, get on the newsletter list, so that way you're on it and I can get a chance to notify you and maybe see you next time. All right, thanks again. In the end, remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.